today's video, we're going over the latest news from the SAVE plan so you know exactly what to do with your financial plan and your student loans. Let's get right on into it. So today we're talking about what is the SAVE plan, what the updates are, and some of the forthcoming changes, and most importantly, Jake, how we should think about paying off student loans when it comes to financial planning.
It's important for people to know what's going on with the SAVE plan. There's been a lot of headlines about it, and we just want to clarify a couple of things that are important to folks who might have already enrolled.
So Jake, for those that may or may not know, especially if they have student loans, what is the SAVE plan?
Yeah, at its very basic level, the SAVE plan is an income-driven repayment plan for borrowers that have federal student loans. So it was a way the Biden administration tried to introduce where folks could pay for 10 or 20 years, depending on how much they borrowed. And after that 10 or 20 years, again, depending on how much you borrowed, the rest of your student loans would be forgiven. The federal government asserts they have that power because it's the student loans that they issued. The other side is asserting essentially there's no act of Congress that has done that or given that power. So they're trying to say you can't do this. There's too many other factors involved in it.
So obviously the SAVE plan has an impact or can have an impact on a lot of people depending on where we go from here. But it's been in the news as of late. And that's really the crux of today's video is, what happened recently, and let's talk about the SAVE plan being blocked.
What we know right now is there's about 8 million people waiting to hear the updates on the SAVE plan and what's going to happen there as it rolls through the courts. But it's been touted by the administration as the most affordable savings plan ever. It's been legally contentious. It's been going back and forth. It's changed a few times, but ultimately the Eighth Circuit Court of Appeals said, we're blocking this. We're not letting it go into effect right now. And that's really going to affect the way that people can pay their student loans now. What's going to happen with, are you paying on it now? Is it in forbearance? What you really need to know if you're part of this plan is right now you're in forbearance, which means you don't have to make payments. Interest will still accrue, but you're not currently on the hook for payments. And if you don't make payments, you can still be part of the SAVE plan if it ultimately does go through. But for now, there's not really much to change on your end if you're part of the plan already.
That's exactly right, Jake. Thank you for the update on that. And obviously, it's good to keep an eye on this, especially if you are one of those 8 million people that is impacted by this plan, potentially, depending on where we go from here. But one of the things that I want to hit on lastly is how we should think about student loans, especially as it relates to your personal finances and your financial plan. There are some things like this that are completely out of your control. However, there are going to be some things that you can control. So let's talk about some of those.
Yeah, there's three big things, Kyle, that we talk about with pretty much everyone that comes across and asks questions about this, or someone who's one of our financial planning clients. And we want to make sure we cover all those three things. So number one, Kyle, we don't want to be that person that ignores the student loans until you're deep, late into your career. And then you're hampered by what you can do because you've got this burden that you're paying every month towards the student loans that you took from the federal government. So we want to make sure we don't ignore those. And Kyle, we've seen that come across our plate a little bit. If we catch someone in their 40s or early 50s who they still have these student loans hanging out there, and there's increased savings they need to do. There's things they want to do with their kids, their family. And sometimes they just can't because we've got to pay off these student loans first.
Yeah, Jake, we've seen it quite a bit. It's a hinder, right? It's one of those things where you can either be paying yourself or you could be paying somebody else. Obviously, that's why you hear folks like Dave Ramsey and a lot of these other gurus out there that say, hey, debt is bad. And typically, obviously, there's things that we can use for debt. That's good debt, bad debt, etc. Student loans, really, other than maybe your potential to earn income going forward, they're not going to serve you by just letting them linger out there. So I agree, take ownership of it, pay it off if you can, especially if you're in the grace periods, or you could take advantage of some of these potential changes. But again, that's completely out of your control. You have to focus on the things you can control. And it's much better to be paying yourself in the long term and taking advantage of time versus just letting these student loans carry with you all the way into your mid to even late career.
That's right. And, that kind of bleeds into what we tell people with number two, like, do not rely on forgiveness of those loans. Again, this is not a political point. This is really a financial one. Don't create a financial plan or a savings plan or a cash flow plan that relies on getting these loans totally forgiven. If you borrowed $20,000, $30,000, $40,000, and sometimes it gets up to $100,000 plus, Kyle. We don't want to be in a position where we don't know what's going to happen with this plan. We just kind of let it sit there because this could go on for some time. there needs to be some sort of plan in place to pay those down and not have them hanging over your head if you ultimately have your own kids and then you're paying for their college while you still have student loans, or you're trying to save while you still have student loans. That's not a good position to be in. So don't rely on that forgiveness long term. We really don't know what's going to happen. And like you said, Kyle, we want to control the things we can control.
That's a great point, Jake. And one of the last points into that is everyone's situation is going to be a little bit different, right? You may have student loan debts. You may not. You may have a house. You may have a car. You may have credit cards. There could be a number of different things. And it's also about prioritizing what debt you pay off first. Let's talk about that third and final point.
Right. Well, student loans, obviously, as I've said, they should be a priority to pay off and not have them hanging over your head long term. But that in mind, you still want to pay off consumer debt with those higher interest rates first. Generally speaking, your consumer debt's going to be a smaller balance anyway. So whether you're doing the Ramsey snowball method or you're doing the kind of avalanche method of debt pay down where you pay that higher interest rate loan first, it's still a good idea to make sure that you've prioritized that correctly. So a lot of times for us, it's going to be, how do we look at car loans, credit cards, things of that nature that are going to have a higher interest rate than your federal student loans? And let's attack those first and get rid of those. So then we can really go after those student loans as well in a triage method. Like, what's the worst thing on your plate right now on that liability side of the balance sheet? Let's knock it out and get it done. Then we can move on to those student loans as well.